Hello, and welcome to another update video about the DXY. DXY is currently doing what we wanted it to do. In the last video, we identified here resistance, the 78.6 retracement. So a possible top in place. I gave you support for the way to the downside. Okay. And here we now need to be watching for a possible reversal at the time I make this video, I don't see a reversal structure yet. So we're going to talk a little bit about the two scenarios that we have on the chart. In the very first scenario, and that is the yellow wave count, price is coming down or did come down in an A wave to the January low, or actually February low. In an A wave, yeah, first wave of a larger correction. Then moved up in a B wave. That was short, but not too short. I think we reached at the time the 38.2 Fibonacci retracement. Let's just double check that. So, and then I just need to double check here it reached, yeah, basically nearly the 38.2 retracement. That's okay for a B wave. B waves can be very short. However, it was still a short B wave, okay? And that's why we also consider an alternative wave count, which is also very likely as long as $101.60 is holding. We're going to talk about that in a minute. So A wave down, yeah, B wave up, and then we would be coming down now in a C wave, basically a wave 1, a wave 2. But now we would need to look at a third wave down, which I don't see at this stage, to be honest, looking at the latest structure, because the move down looks corrective. So we take a look at that in a minute. And then we should get a 4 and a 5, heading somewhere into the low $90 region. Before the DXY can go up again. So now we need to zoom in, or actually, let's talk about the second scenario first, which would suggest that, yes, we came down in an A wave, but the A wave did actually sit here. And then we are now moving up in a larger B wave. And I consider that because this B here in March was very shallow. And we come down in the C wave afterwards. So that what I have labeled here as yellow would actually start a little later. Okay, so in both scenarios, lower is expected. It's just that, do we first get a deeper bounce or a larger bounce? And yeah, we'll see. So at the moment, I would rather be leaning to the higher B wave in this white ABC structure. So let me actually hide the subwave count. Don't need that at the moment. So if I zoom in, we can see the following. In the last video, we were in our resistance area, this target area, trend reversal area, or pivot, however you want to call it. We said, okay, this is either in the yellow count, the wave 2, and would then sell off in a third wave impulsively. And was, yeah, to keep the yellow count likely, price needed to stay below $104.81, which it did. So I cannot rule out the yellow count at this stage, okay? But now we're observing, obviously, the structure. And we said, okay, in the white wave count, which would suggest a higher B wave, still corrective, just a larger bounce, we're looking at this white wave count here, and we could come down in a B wave. So we expected sort of a move down anyway. The thing is that it's now about, it's all about watching, okay, is this possibly part of the third wave? Or is it a B wave, which would then result in a higher C wave? So again, A, B, C in B. And if price can hold the 101.64 level, then we have a good chance to rally higher in this C wave of wave B, which should be an impulse. Okay, or an ending diagonal. Lots of diagonals these days in the markets, which would be very choppy. And then we sell off, yeah. If price breaks through $101.64, then we're looking at the yellow count. But at the moment, I'm actually leaning towards the white wave count. And the reason for that is that the move that has come down off this high, off the 31st of May high, looks very corrective. It looks corrective. You have a bit of overlaps, yeah, overlapping price structure here. So what I'm thinking, this could be in a B wave. If we wanted to label the sub-wave structure, I would really struggle to add here to count this impulsively to the downside. So it counts best, in my opinion, as an A wave. a B wave, and then here a C wave in an ending diagonal, which could be nearly finished, which is forming a 3-wave move to complete the B wave before going higher. Okay. Now, again, of course, it all depends on which support is holding. If it doesn't hold the 101.64 level, then it's likely going to go all the way down into sort of the $90 region. Okay. So this is now getting interesting. And if it gets a bounce somewhere in that region to the upside, what would be a possible target? I think we talked in previous videos about sort of the $108 range. Let's see. If I measure the length of the advance, go to the, see, I have no confirmed low in place yet, so I have to make an estimate. Let's say it comes down to the golden ratio there at 102.29, which is a very important support level, right? Then projections to the upside would suggest either the 1-to-1 ratio is a very likely target for this C wave, or the 1.618 extension is, and the 1.618 extension would point towards $108.54. Yeah, that's basically the DXY analysis. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.